Hey guys, what's up? It's Chad. Just wanted to catch you up here on a big announcement day with tax cuts being announced by Secretary Mnuchin. Um, Pretty amazing. What they're proposing is really big supply side economics. So big tax cuts. Um, some criticism for tax cuts for the wealthy and not enough being done for the middle class. But anyway, let's look at what the reaction was to the market because that's what we are interested in, right? So here we have in the upper left-hand corner, we have bonds. So bonds are quote unquote smarter than stocks. That's what they say. And if you look over to the right-hand side of this chart, we had a decent day actually in bonds. So bonds reacted well. Uh, so that tells me that stocks probably did not react all that well, which is true. If you look in the bottom right-hand corner of your screen, that's the S&P 500, and this candlestick is not that good, right? It's like an upside-down hammer-looking thing, and generally that's not a great sign. The other thing is, if you see the MACD down here in your bottom right-hand corner of your screen, there's a divergence here. So today we reached right up to the 2400 mark, really close to where we did earlier in the year in February, but our MACD is diverging. So our MACD seems to be indicating that there's a lot less strength right now than there was back in February. So that's also a downward indicator. In addition, if you look back up at the TLT, we've reached the 121 level, right? So right about here, which is kind of a level of support there. So that may be why you're seeing a little bit of support in bonds. So we may go back up to the 125 level where we were and what we were talking about last time. Maybe even pass it and go up to the 130. That's sort of what I've been curious about if we make it up there. So we made like a double bottom here in December and then in March, and then we started back up again. So very well may see a move like that. Very interesting. And another thing that sort of confirms that in my mind is gold. So we saw the bottom out in gold last December at 107, and then we saw this like ratcheting up, right? We saw a little pullback to the 50% level, right? 50%. That's pretty awesome. That doesn't look so pretty, but 50%, almost right on the dot. And then we had to move up to new short-term highs, so 122.5, 123. And then we pulled back right to this 120 level where we've got some support. And then we had a great day today. So very indicative of possible move upward further in gold, further in bonds, and maybe indicating a time for weakness in the S&P 500, which is kind of what I've been talking about the last, I don't know, several weeks at the very least. But anyway, so very interesting things to think about. One of these days, I'll get on here and we'll talk more about Reaganomics and supply side economics. A lot of people say it didn't work in the 80s, but then we had a fantastic market run between 87 and 2001. So that was a ridiculous move in the market. It was a really long bull market. And even the bear market in 87 was pretty minor, right? It wasn't minor, Black Monday. It was short. It was short-lived, and then the market ran. So just in the span of a couple months, we lost about 33.33% on in the stock market overall, and the broad indexes in 1987. But before that, we had a really stagnant market for decades up until 1982, and then with Reagan, the market started moving actually, really in '84 up until the '87 crash, and then kept going. So I'm not saying that's going to happen this time because there's a lot of debate if we're in a more of a secular, bearish, sideways sort of a market. We've done great since 2008, but those are some big downturns, and economics-wise, we are not in the same shape that we were back in, like, say, the 90s. So anyway, all right. Well, hopefully that helps, and we'll talk more about supply side economics at a different time, and hopefully that'll shed some light on the picture. All right, you guys, have a good one. Bye-bye. Don't forget to check out my new book on the Kindle store. It's called Hedging Your Investments, and it's free for Kindle Unlimited if you got that. So have it a look. All right, thanks a lot. Bye-bye.